You brought up chapters 1 and 2 from Currency Wars, where you basically highlight this scenario. You said the scenario you presented at the time was that Russia and China would accumulate large gold reserves, pool their gold, and launch a new digital currency backed by gold in the place of the US dollar. Is that the form it would take for you, something backed by gold?
Probably, and here's why. And by the way, when I wrote that, and when we did the war game, and when I wrote that, Russia had about 600 tons of gold, and today they have 2,300 tons. China had about 600 tons of gold, and today they have about 2,000 tons, just slightly less, that we know of. And they may have several thousand tons off the books in the State Administration of Foreign Exchange that we don't know about, because that's completely opaque. So Russia and China did exactly what we warned the Pentagon about in 2009, exactly, which is increase their gold reserves by a factor of 4 or more. But everyone's like, well, the Chinese yuan is going to be the global reserve currency. No, and it's not going to be the ruble. But here's why. Well, there are a lot of reasons, but the main reason is when you talk about reserve currency, you have to understand what that means. It's not like the People's Bank of China has a bunch of $100 bills on pallets stacked up in the basement. When people say reserve currency, what they really mean is the currency of the bonds that they invest in. In other words, they're dollar-denominated assets in the form of treasury bonds or notes. That's what China actually has on their books, not like the dollars per se. So if you want to suggest or hypothesize that the Chinese yuan is going to replace the US dollar as a global reserve currency, where's the yuan bond market? I mean, it doesn't exist. Very small scale, very illiquid, no primary dealers, no win issue trading, no auctions, no repo, no settlement clearance, none of the plumbing and the mechanics of a mature bond market such as the United States. And above all, they don't have a rule of law. I mean, at least if somebody reneges on a treasury bond, you can sue somebody, but you can't do that in China. So the absence of the rule of law, number one, the absence of the infrastructure, the plumbing, for one of the better word, are two reasons why the yuan and certainly the ruble will not replace the dollar as a reserve currency. However, what I was hypothesizing then, and I'd come back to this, is you can create a brand new currency that does have all that stuff. And in my example, they used a Swiss bank, UK law, put the gold in a third-party depository. If you wanted some of the new currency, you could deposit your own gold and get some of the currency or trade with them or run a surplus. So it was a replacement system, but you would need the gold to instill confidence. But they don't have bond markets, so they're not going to have them soon. So the yuan and the ruble aren't going to replace anything.
In the terrifying picture you've just painted, Jim, how should we be protecting ourselves here?
Well, you want assets that are going to be immune from a global liquidity crisis. What are they? Land, real estate, gold, silver, fine art. I see Andy Warhol, Marilyn Monroe has gone, they estimate $200 million. You could have bought that for $50,000 in the 1970s. That's a little more specialized, but there are, natural resources, water, et cetera, energy, oil. If you want to be in stocks, okay, get stocks of companies that are based on natural resources, such as ExxonMobil, Chevron. I mean, I'm just giving these as an example, but so there are a lot of ways to protect yourself. But a regular stock portfolio is not a good one, and banks are going to be in distress. Money market funds are going to be in distress. That's where the liquidity crisis is.
We seem to have a huge chunk of our working age population that is not working. And you probably study this more than most people. Like, what's truly going on there? Do we have is it just an aging population that truly can't work? I know that disability has seen massive growth over the past 15 years. Are there a bunch of people that are opting out or gaming the system or whatever? But what's responsible for us only having 62% of our working age population actually engaged in working?
Well, There are two answers to that, but they're consistent. I'll give you both. The short answer is it doesn't matter. You listen to a number of factors. I'll go back over those factors, and you're right. But it doesn't matter. It's low is low. In other words, the thing about labor force participation is a very simple calculation. You say how many people are working. That's the numerator, and how big is the labor force? That's the denominator. That's all it is. Now, it's never 100%, right? Because there are students and homemakers and retirees and others. There are good reasons for some people not to be in the workforce at any given time. But as recently as 2000, that number was 70%. What drove it between approximately 1975 and 2000 was basically women entering the workforce, women who had been home, as homemakers or performing other roles, entered the workforce, and then that number went up. So, like I said, it's never 100, but 70 was very strong. 62 is down a lot. I mean, that's about a 14% decline. Look, GDP, the standard definition is, it's consumption plus investment plus net exports plus, government expenditure, like a 4-part thing. Yeah, but there's a simpler way to do it, which is how many people are working, how productive are they? Just who's working and how productive are they? That equals nominal GDP. And if you have fewer people working, the economy is going to shrink unless productivity is going up, which it's not. And so this is one of the major headwinds. Now, you're right, there are some early retirees. There were a lot of people who stayed home, obviously, during COVID, and it's very well studied and clear that working is a habit. It's a good habit, I think, for the most part, but it's like any habit. Once you break it, it's hard to go back. So once you get used to not working or working from home or just staying home, the government was handing out checks, beginning with Trump in, I believe it was June 2020. Everybody got that one was a $1,400 check. And then in December 2020, at the end of the Trump administration, everybody got a $600 check. And Biden comes in February 2021, not to be outdone, he hands out, I think, a $1,600 check. So everybody got a check, like 2 or 3 of them. And a lot of younger people opened accounts on Robinhood and started trading Bitcoin. That didn't work out too well. But a lot of people saved the money. But there were very definite spikes in retail sales coming within 30 days of the checks. Well, that's not surprising. I give people free money, they'll go buy stuff. And that kind of kept the economy going. It wasn't a real boom, but it looked good, but we're not doing that anymore. There's no more checks. And so you got a lot of people who lost the habit, a lot of people staying home, watching, maybe the World Series or whatever, eating Doritos, but they're not working. And a lot of people out of the habit, but they just got used to government handouts. Not everybody, but some. And the other problem is, because people say, wait a second, how can you have low labor force participation when everywhere you look, there are help wanted signs, which there are. I mean, McDonald's is paying $35,000 for an entry level, like cashier or hamburger, maker, with benefits, training, and advancement. Well, that's pretty good for, entry level hamburger person. So there are, and people call this a labor shortage. There isn't actually a labor shortage because we just talked about how you've got perhaps as many as 10 million, people between the ages of 25, 54 who are sitting home. But the problem from the employer's point of view, there's a shortage of willing workers.
Willing workers, yeah.
Not workers, but willing workers. Well, what makes you willing to work? Well, a raise, a good pay is one. As employers can't afford to pay the clearing wage to get people off the couch because they'll go bankrupt themselves. They're working on very small margins, sales are declining, etc. So I'll pay as much as I can to get the workers, but it's not enough to get this person off the couch, so to speak. And so you've got this really weird situation. I use weird in the technical sense, where you have a huge pool of able-bodied, potential workers, but a shortage of willing workers because you can't pay a clearing wage. But that's more a reflection of how stressed businesses and how low margins are. And then you look at the big names. I mean, I guess Twitter is the most recent, but Amazon, FedEx, Target, they're all looking at big layoffs, and
big layoff announcements
coming every day. So.